Good morning, everyone, and welcome to the European crossover. We're seeing the dollar continue to maintain its weakness, which isn't too much of a surprise in the light of the way at the end of the week. And once again, they're always going to go and push the market to extremes. We actually came into that 14 area, that little zone I talked about, that 1413 to 1429. That got its marked on the 2H, and we'll look at that. That was from, if you remember the other day, when we had, I don't remember what report it was, when I was looking in case they might blow doors and run all the way up there to the 14 area. And I thought, if they get into that, then that's going to be a good area to go and short the market or fade against it. I wasn't actually up when they went into that area, but at least from a scout perspective, that's a really nice area to come into. We'll take a look to see what's coming up on the calendar. There's really not a whole lot of news so far. Did see in the Eurozone news. I actually shared that earlier. So as we come into the U.S. session, we're going to have a personal income and also Canadian Producer Price Index and also the U.S. Employment Cost Index. Now, at 9:45 Eastern, we'll have the shy PMI. And at 10 a.m. Eastern, we'll have University of Michigan, but it's going to be final numbers on University of Michigan. So once again, as we come into the U.S. session, 8:30 Eastern, we'll have personal consumption income. We'll also have the PCE index approach to used to getting a little bit more attention. I don't think it's going to be as much at this point. Canadian Producer Price Index is also at 8:30 Eastern. Employment Cost Index at 8:30 Eastern. And then 9:45 Eastern, shy PMI. And then 10 a.m. Eastern, final University of Michigan numbers, which I don't think is an impact the market so much. The final numbers. And also the dollar, I mean, the dollar yen made to area I talked about before, not this last run, but the one before, which was at 684 here. I don't know if it may, looks like we might have stopped it around 686, 687, but it made down to that area. And we've recovered a little bit to 712. Not a whole lot. So we're going and moving to the charts. IB says, Polly, thanks for all you do. Think the dollar can rally versus the yen from here. We'll take a look at it because it's the second time it's come down here. Let's move into the charts. I don't know, my dollar yen chart screwed up, but I don't know what happened there. I'm sure it'll be updated or corrected. I'm not too worried about it, but it's missing some data. I don't know what's going on there. But I'm sure it'll be corrected because I use that DTN IQ feed and their data is very good. But I don't know what happened in this. So you can see here it's missing that data. I don't know what the hell happened. So I guess it lost yesterday's. I'll have to reload over the weekend or something. I don't have time to forward it right now. But we'll take a look at it. So it's obviously missing the end of the day when all the wheels fell off the caboose. So it's missing this date. I did have some internet problems. Like I told you, we had storms here and everything else, so I think it kind of messed up my internet. But it shouldn't have. I rebooted everything, so this should have loaded up. I'll have to keep an eye on it and find out if I have tried to fool with it over the weekend. But this is that area that I talked about. If you remember back here, I thought we would take a dip. Remember I said, hey, this is a great area to get long, that 684. That's where I want to get long from a scalp perspective to let it ride higher. We just never made it down there. And of course, eventually we launched up and we had the this extension of the range and that hit that basically to the T. Of course, then we fell off because the BOJ didn't do anything. So generally what happens in a situation like that, you'll have to test the stops here, and they'll take those people out. So if someone's thinking, hey, I want to buy it, you don't want to buy it ahead because they're gonna want to test the stops. No one's going to jump in front of the train until the stops are tested and taken out, which is what we got. And now we're into the 684. I haven't done any more work down here. Probably have to load up data. Let's see if it'll even load it up here. Okay, great. What is it? So, I don't have any data come back from this. So this area is pretty key, which is way below the market. Trying to get a little bit closer to where we were trying to show last night. In a situation like this, they'll come back and try to touch this even though we've got support here, so I mean, we can still, obviously, we can still work lower. I mean, come down here to the 684 area. There's a lot of, a lot of area for them to go in and drop right into here. It really don't look like you really see some decent support until you really come into this like 535 area, maybe 530. So it can definitely fall further. But even if you want to get bullish value in, you'd want to wait till next week. There's no use trying to step in ahead of this. And now that it's got a head of steam, after, you know, we rallied up here, we came down here, get a double support, double test here, and then we come back here, we can't go any lower. We launch them up, everything looks okay, the Bank of Japan doesn't do anything, so nothing's changed, it's only reinforced a negative picture. So that augurs for a lower test. And then if you look at this, that makes sense. 161% of the recent range, which is a low at what, 762 or 764 to 1187. Projects a move to 105. So the 105 makes a whole lot of sense. And there just really isn't anything there until you get to like 535. And then there's this move just below 105. So what Blake was looking at originally was right all along. Because it looks like, I mean, now in light of what's happened and the negative tone to the market, you know, doesn't mean we can't bounce a little bit, but it looks like overall we're going to want to go to 105. Because everybody, it's kind of like, you know, what you saw in the screws yesterday when they rallied up into the 2090s. So now, as it fell back, remember what happened with the screws, now they fell pretty hard, went into the 2070s. People are not apt to jump in and turn around and buy the spoons now. They're going to say, you know what, I'll consider buying it again when it gets down into the 2050s, which that's my target, one of my intermediate targets, which is 2057. It's actually 2056, but I said, you know, be looking to cover 2057. So with the dollar yen, no one's going to look to try and get on the long side again until once we test this 105. Then we can try and see a bounce at that period. So if you're trying to buy the dollar yen, I mean, even if you wanted to, I would say wait till next week. So here's the euro dollar. We talked about this before. This one has really surprised me too. But I think the reason the market's this way, and they're forcing the people's hands right now, because the statement from Yellen came out a little bit more dovish than even I expected it. I mean, there were still people thinking we're going to, the same dumbass, excuse my language, that thought we're going to raise in March, we're going to now raise in June, because they're always so wrong. If you've heard the interview from Mark Chandler, bam, he freaking nailed it on that. When he said 75% of the economists now see a rate hike in June. But when he looks at the Fed funds rate, it's only priced at 25%. How many times do I tell you, these are losers on Wall Street? They're losers. They get everything wrong. Remember everybody that was all, it's going to be a raise in March, because, you know, the Fed, you know, Janet Yellen's going to save the world. She's going to put the U.S. at risk because we're going to take the brunt of everything, and we're going to raise in March because we don't want to disturb the world when June comes, because you have Brexit and all kinds of things, and we just can't do that. So we're going to have to just take it all on our own and raise rates. F that. Whatever. So these idiots thought we were going to raise in March. Now the same stupid idiots thought we were going to raise in March say we're going to raise in June. And once again, just like I said before, I just didn't see that happen. I go, I think it may happen in the middle of summer, and I think someone said that the next meeting would be July. I think July is a possibility. But in the statement, I thought that they would not be as worried as what was going on in the globe. So my take was that they would even say that the situation had lessened, because global concerns had lessened. They took out the part of the statement that says whatever, that they're really worried about the global market. But they didn't say that they took it out, which obviously implies it's lessened. But they didn't come right out and say it's lessened. And also the capper, as I said yesterday, was the part about the suggestion, not suggestion, but the way they were saying is kind of the suggestion, or the way they're looking at it, will be that the rate increases will be very, very gradual. That's code word for it ain't coming anytime soon, guys. So that's what really has it on the back heels. I thought that if the dollar, if she would have taken, they would have taken out, not that the global risk concerns had abated, but that it would be not as strong, and that she would say, or the Fed FOMC group would say, hey, look, it's lessened. Then that would be like code word like, hey, you know what, we're close. Then we were going to do it in June, or definitely pretty doggone close. And that would have reinforced the dollar. I think Mark Chandler had it right when he says the dollar won't rally until when the market believes it's going to be coming, the rate hike. We know the rate hike's going to be coming, but the market's essentially trying to time it. And they're going to go, they always lean as to what's most, like they say, it's called recency bias. So what's happened? It's the same way the 10 years got smoked, but they got smoked in reverse to the upside with interest rates falling. Is because so many people were positioned on the wrong side. So when they didn't raise, we got that super high move, and it kept going. People were just saying, I can't understand it. This is crazy. Well, because it's recency bias. Because not only were people on the wrong side of the market, they were pushing it for all it's worth. Well, it's kind of the same thing here because people were positioned, myself looking for a stronger dollar. But this is that area. Here's the area. We went right into that area I talked about. This is when the market rallied. Remember right here? And I tweeted out, I tweeted out the inside call. I think I tweeted out the feed too. But I said, hey, look, they may try and get up into here. Because we were saying, I go, God, if anybody is stupid enough to push in here, this area is favorable. And I talked about this band, 14, 13, 29. And we ran out of gas right at 14. But here, you see where they went to 14, 13? And they had a pretty decent pullback from there. Not too bad at 30 pips if you're stopping. But once again, it's a Friday. They're going to make the people that are alongside the market, they're going to make them pay. So I don't see the euro making a new leg up. But you have to understand that the people that are on the wrong side of the market, and on a Friday in FX, they're going to squeeze them. And they're going to keep squeezing them until they scream uncle. That being said, like, jump out of their positions. But I don't see the euro making a new leg up. Because rate hikes will come. It's just a matter of, I think they'll probably come as early as July. They won't come in June. The only way it comes in June is if, once again, no one knows what the numbers are going to be like, but we have to have fantastic economic and payrolls. I think Mark Chandler made a very good point too about they've acknowledged it, but they're not placing as much weight. So even if you get good numbers, it's not going to move the market as much as it would have as in the past few months. Because they're saying they need to see more consumption as opposed just to even though they're acknowledging a better employment picture, that's not what's going to tilt the scale. So even if you get a better employment picture, it's a move for the day in that session and maybe the next day or two, but it's not something that's going to tilt the market completely. Not until you see better consumption numbers, and that's what they're going to start to focus on. Which today we have some consumption numbers, but I think just recently with the GDP, that obviously is going to have a greater weight than what today's consumption figures are. So, and gold's still on the bid up here, which it's still playing into the weaker dollar a bit, and we're still trying to punch higher. I don't know that gold has the juice to go higher. My thinking is, and the previous high was at 1308, because that's what someone saying, gold's looking to 1300. I'm like, wow, we did it already? And I looked at it, no, we're not. Because I had the silver chart on there. But, I mean, within reason, I guess you're kind of sort of in striking distance. But once again, just like the dollar, I really don't think, I mean, gold could be different. It could go higher. I really don't see it. I kind of see it the same way the dollars. They're gonna put their feet to the fire. I just don't see another leg up in the euro. Gold is kind of marching to its own drummer, and silver's had a big move, so it might try and drag it. Maybe we could get a little bit above 1308, but I think it'd be kind of like a blow-off type thing. Not a blow-off, but a move where it goes up there and there's just not a whole lot of buyers, and then eventually the dollar starts to strengthen and we come back lower. I don't think the wheels fall off the caboose, but we probably come back lower. If we get up to 1308, eventually maybe we ultimately end up testing 1239, and then we stabilize. Maybe we go even a little bit lower, and then we'll try and work a little bit higher. But no one knows what the future holds. I'm just saying price structure-wise how that may play out. Cable finally made it to our area here. This 4560, I haven't done anything with the cable. But remember we talked about this area here, and it ran gas. And now we finally, if you want to take it on a quick scout, I just haven't paid attention to it. I mean, we keep it here because it's one of the majors, and people like to know what's going on with it. This was a nice little hammer right here. And let's say I haven't paid too much attention to it, but here's that 4650 area we talked about. Back this up for a little bit of perspective. You see right in here, but I'll back up even more for better perspective. Right there. You see, on the way down, I'll take a little bit. You see right here, and then here, and we'll actually move this out. We'll get better look at this. You see how the market came down before? It kind of just barely held it for a little bit, around it a little bit. Kind of, there was a little bit of a battle. We lost it. We tried to hold there with our fingernails, and we lost it again. And then made one more last return up here. That was here when the market runs out of gas and accelerates slower. So the last move up here, you can see. Remember how we talked about the dollar yen just a little while ago? You see, that's what the market likes to do. When it comes up to these levels, it wants to take out those stops. And so that's exactly. I mean, I've seen some stories that came out that posted from Reuters is like there's a lot of tankers, and it looks like there's too much supply, and we could be running the same thing a year ago, but I don't know what to think. I'm saying is like, here's the market. It just keeps going in one direction. I've told y'all is I can't make money in a one direction market. It's just not my game. I don't know if it's good to move to a 5-minute. Okay, let's 5. If a market's going this direction, I can't make any money in that kind of market. I just can't. And it's just gotten so silly. And then it's also into a Friday, which has me a little bit worried. You don't see the Friday thing tendencies that you see like you do in Forex. But nonetheless, it's a one-way market. Not to mention, it's been trading almost like a one-way market, for the entire week. You can see this, it barely moves, and also just going here. Even in this consolidation area, this is only on the 5-minute chart, we start taking off again. It looks like, okay, well, maybe this is it. And, I thought probably after the close of the New York session, which is right here, that might be a good fade. And it did go on in fade. I didn't do anything with it, but I'm saying is I saw a pullback. I bet it's a good fade. Now here, it looks like, if you look at it technically, it looks like, wow, you see now they're failing right here, it's going to go low, which it does. And then it looks like maybe this is it, but look, it reasserts itself. Because on a Friday, it's hard to fight those forces. That being said, this market is just going wacko in my book. I mean, I'm just saying is, you know, it's so crazy because you remember they couldn't stop the price from falling. Now you can't stop the price from rising. It's just like, I mean, I can see if it was something crazy like it was zinc or something like that. But I mean, this is really kind of going pretty wacko. So I don't know. I'm just saying is we're here at this zone here. Let's see, Adam says, he sees a rising wedge. You know, maybe so. I mean, I guess what you might be looking at is this. Blake's the one that's pretty awesome when it comes to wedges. I think you might, maybe you're seeing this. Wedges are not my forte, but it looks like you're seeing this. Well, because if you do it like that, it's not much of a wedge unless you go like this. But then you start getting creative and doing it the way you make things match. You see what I'm saying? Because really it'd be like, well, I guess if you try to do it like off the thing here, but this is more of a wedge off of that one. But you can see here that you might have something, you know, but the thing is it hasn't stopped. It doesn't mean it's going to end because the thing has just been relentless. I think we're close to the top, but I've been thinking, I thought 45.60 here, which we did see some good pushback from a scalp perspective, but the market's reasserted itself. And I subscribe to the credo that if you can't really figure out what's going on with the market, you're best leaving it alone. And I'm glad that for the most part over the last couple of days, I've done just that. I've left it alone. Let me see. So this is a pretty good area, but you know what? 45.60, 44.92, this big bias, and this is the part that's a little bit scary because you have to look at it overall. 44.92 was a huge bias pivot, and we got above it. When you get above it, then the bias is to the upside, and that's where it's going. And I thought, well, 45.60 looks pretty doggone good here, and we did get pushed back some, but here we go, back launch it again. So now 46.40, I mean, at some point you're just like, this is kind of nutty. And that's what I'm saying is now I've turned my attention more towards food because I don't know when this thing stops. I think it stops pretty soon, but then I've been thinking it's going to stop pretty soon for the last week, and it hasn't stopped. And like I said, especially in the last 2 days, other than some minor scalps, I'm just not, I'm leaving it alone because I keep telling y'all I'll never be the guy that makes $1.50 in crude or 200 or 300 pips in the euro. That's not my game. So how can I say, oh yeah, I'm doing really well? Well, I can't trade a market that trades in one direction because that's not my style because I trade the give and take. And there's just there's no giving. There's a whole bunch of taking to the upside. So like I said, we're coming into this zone here, and we can take a look at it on the 4 hour to see if we can see where it comes up with this 46.40. Let's come back from here. What did it look like at that time? Okay, here's 46.40 to 47.29. You see that here? So it is a pretty good little zone here if you look at it. You see here, this is, you could almost say this was like almost when they had like a head and shoulders, so to speak, but you can see here, this is a pretty good area right in here. 46.40 is down here, and 47.29 is right there. So a pretty good little zone here overall, I have to say that. But that being said, this market is just acting wacko. You know what I mean? So I'm not gonna, once again, here's your 46.40, and here's your 47.29. So, but then again, we can still make it up to 47.29. I don't understand what's going on, and if I don't understand what's going on, I'm not going to put myself in that kind of situation. And I thought to myself over the last couple of days, when it does turn, then it'll turn and you'll have the momentum go in that direction. Until then, the momentum, no matter how stupid it is going to the upside, and you best not stand in the way. No matter how much you think, wow, what a great area, what if I've done this, I've done that. I mean, I thought that on the close. When we got up here, and I thought, man, and sure enough, we pulled back on the close. Decent amount too, like 50 cents or something like that, and then it rallied them up to, I think, 45.90 and then they pulled back again. But you know what? If I don't understand what's going on, then I just can't trade that kind of market. It's just, I mean, if you come in, just like we were talking about the dolly on the lower side or whatever, or I forgot which market we were referring to the upside levels, is you have to know that, okay, well, here's my upside level, and I'll probably see some pushback, and that, so I know what my risk is, and I think this will happen. But this market just keeps going higher, and then it pauses just for a hair, then goes higher, pauses for a hair, goes higher. It's just, I can't trade that kind of market. And then being on a Friday on top of that, after it's all going in one direction, no, I'm just going to go in and leave it alone. I mean, I saw a tweet from Nick Trades, and she said there's some key fibs somewhere right in here, and she said, but she would kind of suggested we wait till next week to take on the market. You don't want to take on the market over the weekend when it's all going in one direction, because they might just gap it up higher. So, I'm not going to do anything with this thing today. I don't want. I mean, it's just like I'm doing much better just trading the SPOOs. David says, I've read a few articles about crude where they say crude's new magical number is $50 and producer will be looking to add oil, rigs at those levels. That's just a big even number. I mean, but you make a good point. The higher it keeps going, and it's not like it spiked in 1 or 2, 3, 4 days. I mean, it's got the sustained run-up, so the momentum's in crude's favor. So I think even Nick had mentioned about that. She goes, that's where they'll come in. She goes, for swing, I think she said for swing longs, they'll wait till next month. And she's right, because going forward, you wouldn't say, okay, now I think it's a short. Okay, that's fine on a short-term basis, very short-term as far as, near a few days or whatever. But on the pullback, people are going to be trying to buy the pullbacks because the momentum is going to the upside. So that's a good point that they may be thinking, okay, the worst is over. And also, as the global economy starts to pick up, people are going to start discounting. Hey, look, there's going to be demand overall. So there's a lot of now everything's flipped towards a bullish argument, and I can see that we just come too far too fast. Where does it run out of gas and then come back for a for a pullback to reassert itself? But where does it eventually run out of gas before it comes back for a pullback? At this point, I don't know. It just keeps going through these levels. So, I mean, how can you stop it? I mean, at some point you have to say, even though I thought 44, this was huge, 44.92 was huge, 45.60 to 78%. At some point you have to say, yeah, that's why I tell people, don't run away from your trades. It's better to say, I'm wrong or whatever. I'll tell you what, I'm not saying I'm wrong. I think that whatever we're done, I have no idea what it's doing right now. It's just marching to its own freaking drummer. And at least I know enough to just get the hell out of the way. That's what I'm doing right now. I'm just like, you know what? I don't want no part of it. I mean, even if it was going higher, but we're seeing all this good two-way action, it's just like a runaway train. And I can't make money in that kind of market. And I just know the best thing for me is just not to do anything in this market. I mean, I'll look at it. I found that the only time you can really make money right now, the way this market's trading, as a scalper, is early in the U.S. session. After that, forget about it. I mean, because it's just going in one direction then. So I was like, and I thought about, there were areas that I said yesterday, I was just imagining, I go, okay, I just put it just above the highs. And the market would just pause and just go right through it. Okay, well, then be just above this high. The market would just pause, and I wasn't even putting on the trades. I was just imagining, I go, what if this, what if that? If the market's not doing what you think it's going to do, then the best thing is just stay away from it and just say, you know what, I'll wait till I believe common sense comes back in. Well, I mean, like they say, price is truth, so that's where it is. I can't do anything about it, and I don't understand it at this point, so I'm not doing a doggone thing with truth. So getting here to the SPOOs, we talked about this. Um, And also good suggestion by, and a good, I have to say, a good thoughtful suggestion from Robert. I appreciate that, I really do. So probably when we do the breaks, I'll probably put it like on the Reuters feed, and then we have like you said, sometimes if the music's loud, you can't hear very well, so maybe with a put on mute, or either put on some like Pat Metheny, some jazz or like that. So that might work out better. We'll see how that works out. But I appreciate that. I appreciate the thoughtful suggestion and the time he wrote a pretty good. Took the time to go and write that. So I appreciate that. I really do. So let's take a look here on the SPOOs, and so I looked at this 3 days ago, and I saw this when I was just kind of like looking at the chart. I thought, you know what, that's a diagonal head and shoulders, and not that I would just go based on just this chart pattern, but the way that the price structure was setting up, and the way we were running out of gas. This really meant a lot to me here. Is that the market couldn't gain traction to the upside, to the downside, and I really think that this moving crude is negative. It's too far too fast, and I think that it's going to whack consumer confidence. And so I think it's a confluence of things. It's not only this technical target, and actually this technical pattern is the least of my weighting. When I say weighting, I mean is WEIGHTING, not waiting like waiting for something. But it's the least part of the weighting in the equation, because yeah, it's a diagonal head and shoulders, so technically it sets up, but when we got up here, this 2104, the reason I was saying that was my target, and I go, the next morning I said, I'm bearish. And actually on Inside Call, I was saying I was bearish that afternoon, was because it's meteoric rise in crude. Well, that was like back here, and it hasn't even stopped. It's still going higher. I mean, when I said that was here. And crude, and I go, this is stupid. This is absolutely stupid. And that's where I got out here, and I think that, I think Blake's getting ready to come on. So that's why I'm looking for a little move let me see. Hang on, but I think that this move in crude is really going to it's going to whack consumer confidence, and I think it's going to hurt the SPOOs, and why I think the SPOOs will go lower. My next target is, these are just stopping points, 62.50, and I think I hear Blake.
Hey, what's going on, Paul?
Not much. How are you doing?
Aside from the just dollar